Morning, folks, and welcome to today's episode called Mark Cuban, the Lucky Billionaire. And look, I'm being a bit flippant here because this is a guy who really did work hard for his money. He became a millionaire at 31 and then proceeded to build a company that had the most successful IPO opening day in history up to that point. And within 9 months of that IPO, he sold the company for $5.7 billion, becoming a billionaire. Yes. Astonishingly, at the time of that sale, that company had revenues of just $40 million. Like, how did he manage that? He then did what every sports fan would dream of doing and bought his favourite basketball team and turned them from also-rans into champions. Now, he hasn't been lucky all of the time. He's had tussles with the SEC, got caught up in the Me Too movement, missed out on an investment that could have netted him $4.75 billion. But through Shark Tank and other high-profile investments, he's now being mentioned as a potential presidential candidate for 2028. It's a fascinating story. Enjoy. So Mark Cuban, he was born in Pittsburgh, 1958, working class family. His grandfather sold merchandise off the back of a truck after immigrating from Russia. His dad worked in a car upholstery shop. So like lots of entrepreneurs, Cuban, he hustled like from a very, very early age. At 12, he was going door to door selling garbage bags. He went to Indiana University in Bloomington because it was the cheapest school in the top 10 list of business schools. He continued to hustle while at college. He started a business giving dance lessons. Then this evolved into hosting what he called lavish disco parties. And he claims that he paid for a year of tuition from the money he got from an illegal chain letter scheme. Cuban says himself that it was basically a scam, but he insists that nobody lost money. Now, when I first came across this little tidbit, I wanted to know two things. First of all, how he actually pulled it off, because I wasn't familiar with this kind of chain letter scam. And also, how he could claim that no one lost money. So, I did a bit of digging, and here's how it worked. You'd open your post and find a typed letter, a short set of instructions, and a list of names with home addresses. You were told to send a few dollars to the person at the top of that list, $5, maybe $10. And once you'd done that, you removed that person at the top of the list and then moved everyone else up a slot and add your own name at the bottom. Then you made copies. The more copies you sent out, the faster you'd climb the list. And when your name finally reached the top, you were supposed to start receiving money from strangers doing exactly what you'd just done. So for Cuban to make enough to cover a year of tuition, he must have churned out hundreds of these letters. But look, it's a pyramid scheme, pure and simple. And while Cuban says that he shut it down before people started losing money, that doesn't make any sense. Like, once those letters are in the system, there's going to be someone who loses some money. Also, while at college, Cuban and some friends took ownership of a bar. It didn't last long. It was shut down for serving underage students. Now look, all of this is definitely a bit shady, but I got to hold my hands up here. And without giving away any details, I did some pretty stupid and possibly shady business stuff when I was in my teens and early 20s. And to be clear, I'm not excusing what Cuban or what I did. Wrong is wrong. And I wised up pretty quickly. But I'm just saying it'd be hypocritical of me to, come down heavy on Cuban for what I'll call a mixture of youth, overconfidence and bad judgment that is corrected for most of us through experience. Now, Cuban graduated in 1981 with a Bachelor of Science in Management, and he worked in a bank for a year before moving into a 3-bedroom apartment with 5 other guys in Dallas. Cuban slept on the floor, bartended until he landed a sales job at a shop called Your Business Software, one of the first retail software stores in the city. But 9 months into the job, he was fired for going off to pick up a client's check and closing a sale instead of opening the store. But then the very next day, he started Micro Solutions. This was a systems integrator and software reseller. He had no money, he had no outside funding, but he had some customers from his previous job, and he just hustled from the get-go. Quotes from his friends, they said he was a consummate salesman, a man with a level of energy that you almost never see. Now, Cuban himself claims that he didn't take a vacation for the first 7 years after founding Microsolutions. And so by 1990, the company had around 80 employees, over 30 million in revenue. And that year, 1990, he sold it to CompuServe for $6 million and he cleared about $2 million. So he was 31, he'd become a millionaire. What did he do? He bought a lifetime American Airlines Air Pass. It cost him around $125,000 and that let him fly first class almost unlimited. And for the next 5 years, he travelled, traded stocks and just enjoyed himself. And like I was thinking about that 5-year hiatus, it says a lot about Cuban because most entrepreneurs would feel the urge to get right back in the game. I know myself, it's almost like an itch that you need to scratch. We always have to be doing something, working on something. And to have the temperament to go, you know what, I'm going to take a few years off and enjoy myself. I know of very few entrepreneurs who have actually done that at such a young age. Anyway, he came back 1995 after 5 years of travelling and enjoying himself. He and his friend Todd Wagner, they bought into a company called AudioNet, and the idea behind it was pretty simple and practical. They wanted a service that would let them listen to the Indiana University basketball games over the internet. In 1997, they raised $5 million. The business was still loss-making, but it was growing. And of course, what's crucial here is the timing. It's brilliant. It's the dot-com bubble, and content on the internet, it was being seen as the next hot thing. By this stage, they'd rebranded the company as Broadcast.com, and they were now streaming hundreds of radio stations, 17 television stations, and holding the rights to about 450 college and professional sports teams. And on the back of that hype, Broadcast.com went public in July 1998. Demand was so strong that when trading opened, the stock jumped from $18 to $68 before closing at $62, making Broadcast.com worth over $1 billion. And at the time, it was the best opening day for any IPO in US history, surpassing Netscape's record from 1995. And Cuban's 28% stake was suddenly worth $297 million. And what I find really unbelievable about this, but it does show you the kind of bubble we were living in at that time, is that it's valued at over $1 billion, but its revenue for the previous year was just $22 million, with losses of $16 million. Now, after the IPO, revenues, they did increase, set to earn about 40 to 50 million in 1999. So nice growth, but still pretty small when you consider what happens next. Because in April 1999, just like 9 months after floating, Yahoo bought Broadcast.com for, and you're not going to believe this, for $5.6 billion. Now, and again, remember, revenues of just 40 to 50 million. Now, Yahoo was in the middle of what was called the portal wars, where each major site was trying to own its own databases, services, and content that, might anchor users to their ecosystem. And rich media, the type of content that Broadcast.com was streaming, was seen as the future of the web. The deal, of course, made Cuban a billionaire overnight. His stake was worth $1.4 billion. But it was an all-stock deal, so Cuban now had a lot of Yahoo shares. And a part of that deal, he was required to hold on to them for 6 months. But as soon as that ran out, he sold all of his shares. Because Cuban rightly sensed that the market was unsustainable. He knew it couldn't last forever. And he was right. Within a few months, the bubble had burst. Yahoo shares went from $118 to $8. So in other words, if he hadn't sold his shares and held on to them for those extra few months, his $1.4 billion would have been worth $95 million. Now, 300 of Broadcast.com's employees became paper millionaires. Here's hoping that they also sold their Yahoo shares before the bubble burst, because Cuban has always been very vocal that employees should get a cut of the company's success. And in fairness, he appears to have consistently practiced this throughout his life. And it's something I like about him, because this isn't virtue signalling. I get the impression that he thinks it's fair, but he also realises it's an excellent way to get employees to buy into your mission. So I was interested as well in finding out, so what happened to Broadcast.com? Well, Yahoo folded it into this broadcast services unit and it just fizzled out. I mean, there's no surprise here. Yahoo, which without a doubt was the early giant of the internet, it went on to make a string of such bad strategic decisions. And their story, which I will definitely cover, it's going to be fascinating because I can't wait to find out and understand exactly how they managed to screw it up so badly. Now, some people will say that Cuban just got lucky. Yeah, he did. I mean, Yahoo massively overpaid. But, I think reducing it to luck is a bit lazy. He worked hard on both of his companies. And as the golfer Jack Nicklaus has always said, the harder I work, the luckier I get. I mean, his timing was fortunate. But he also deserves an awful amount of credit for selling his Yahoo stock when he did. This was in the middle of the dot-com bubble. And it wasn't obvious where the top was. An awful lot of people would have held on to those stocks. Cuban didn't. So that took discipline and foresight. Now, with the Yahoo deal behind him, Cuban did just like he did after selling his first business. He decided to have fun. First, he bought a Gulfstream jet online for about $40 million. It set a Guinness World Record as the largest single e-commerce transaction ever recorded. And then, in early 2000, he bought a majority stake in the Dallas Mavericks for $285 million from H. Ross Perot Jr. We mentioned his father, Ross Perot, in the Michael Dell episode. Now, the franchise had spent 2 decades drifting with just a 40% win rate. And the Pros were like most team owners back then. They were detached, invisible, kind of treating the franchise like a trophy asset. Whereas Cuban, he was the exact opposite. He didn't buy it as an investment or as some trophy. He never thought of it that way. He bought it because he loves basketball and is a huge Mavericks fan. So he didn't run the Mavericks like a legacy sports team. He got stuck in from the get-go, up to his elbows in every aspect of it. He sat courtside in jeans, t-shirt, yelling at the refs, high-fiving players. He became part of the show. He was fined constantly. By 2006, his cumulative fines had passed $1.6 million. But of course, this helped to embellish Cuban's reputation. Loud, visible, completely different from the old guard. A guy who wasn't afraid to take on the NBA. And in fairness, it wasn't just all about Cuban trying to draw attention to himself. He did push experiments everywhere, leaning into technology and science. The Mavericks had new analytics, improved amenities, sports science and recovery work years before it was fashionable, real-time digital stats and video tools on the bench. And in the process, he turned the Mavericks into one of the most advanced organizations in the NBA. And the results, they started to show. In his first decade as owner, their win rate went from 40% to 69%. They reached the NBA Finals in 2006. They didn't win that time, but they finally did win it in 2011 when they beat the star-studded Miami Heat to win their first ever NBA title. They reached the finals again in 2024 but lost to the Boston Celtics. So, as you can imagine, for many fans, Cuban is seen as a hero. And while the team's form has ebbed and flowed, he can definitely be credited with transforming them from regional also-rans to champions and genuine contenders. Hey everyone, a quick update for paying subscribers. Up to now, paying subscribers have had access to a batch of bonus episodes that Keith and I recorded back when Great Business Stories was a co-hosted show. I've now reached the end of that archive, and rather than creating new episodes that would end up diluting the quality of these weekly episodes, I'm pausing subscriptions for now. So if you're a paying subscriber, please download or listen to any bonus episodes you want before the end of December, because the bonus feed will come down at that point. And of course, cancel your subscription. These weekly episodes that you're listening to right now continue exactly as normal. Nothing changes here. This is just about keeping the standard of the weekly episodes as high as possible. Thanks so much for listening and supporting the show. Now let's get back to the episode. Now, it's fair to say that the Mavericks have been Cuban's biggest and most successful venture since selling broadcast.com, but he has started other businesses. In early 2001, Cuban, again with his friend Todd Wagner, they formed 2929 Entertainment. The genesis of this is Cuban looked at Hollywood and he saw a system that he believed, I suppose, could be disrupted, because you had the studios controlled the production, the theatres controlled the large screens, and the cable networks controlled distribution into homes. No one owned the whole chain. So the plan that Cuban had, sounded great in theory, but it was impossible in practice. He wanted to own the content, own the screens, own the pipeline between them. By late 2001, they had forked out $300 million to buy Reicher Entertainment, which had a large library of TV episodes and movies. 2 years later, they bought Landmark Theatres, the largest art house cinema chain in America, which had gone into receivership with more than 50 cinemas. Then came HDNet and HDNet Movies, high definition cable, and they also added Magnolia Pictures to control the full release cycle. And the moment that was meant to have defined this whole vision came together in January 2006. Bubble, a movie directed by Steven Soderbergh, was released in Landmark Theatres, on cable and on DVD on the same day. The studios, of course, hated it. Independent cinemas, they boycotted it. Variety called it a direct attack on the theatrical window. But it wasn't much of an attack, in fairness. Like, the movie bombed. It just got $70,000 on its opening weekend in the box office. The grand vision, it never really materialised. Now, to be fair, Magnolia Pictures, that produced some really, really good work. If you've ever seen the documentary, Enron, the Smartest Guys in the Room, or Man on the Wire, they were Magnolia Pictures. So brilliant documentaries. But over time, Cuban and Wagner, they sold off the various parts of the 2029 group. The only part that they held onto is Magnolia, which has a large movie library. And with the onset of streaming services that are always looking for content, Magnolia has become, a nice little earner. The only figures I could get were from 2020 and 2021, where it made $30 million and $40 million respectively. Now, my own take on this, and this is where I think the whole 2029 vision ran aground. Like, the idea was ambitious. And look, ambition is fine. The problem was that Cuban was trying to take on 3 very entrenched industries at the same time. Studios, theatres and cable networks. Each of them with very, very deep pockets. Like, to even attempt to disrupt each of the 3 sectors individually, you'd need huge amounts of capital. And while Cuban invested a few $100 million, it barely made a dent. Also, I don't know if even a huge investment on its own would necessarily work. Like, the disruptors who succeed in this space, they haven't succeeded by taking on everyone at the same time. Like, Netflix started with DVD by mail, then moved into streaming, and then gradually moved into original production, step by step, building scale before challenging the incumbents. Like, in short, Cuban bit off way more than he could chew here. And while this business didn't work out as planned, during all of this time, Cuban was a very active angel investor. And I will get on to Shark Tank in a minute, but there's one very noticeable investment worth mentioning from this time. So this happened in 2005, when Cuban invested $1.8 million in a company called Red Swoosh, founded by a certain Travis Kalanick. Red Swoosh was then sold in 2007 for about $23 million, so Cuban made money, though his exact ROI was never publicly revealed. But what matters most is what comes next. In 2009, Kalanick came back to Cuban. He was raising money for a new startup, Uber. He offered Cuban 2.5% for a $250,000 investment, valuing the company as $10 million. Now, Cuban liked the idea, but he didn't like the price. He was also worried that taxi regulators would come after Kalanick. So Cuban offered to invest at a $5 million valuation instead. Kalanick didn't get back to him. With a current market cap of $190 billion at the time of recording, Cuban's $250,000 would now be worth about $4.75 billion. But look, despite losing out on this potential windfall and his huge media plan not really working out, you could still make the case that in the 2000s, Cuban was really enjoying himself. He got married in 2002, he had 3 young children, he owned his own basketball team and they were on the up. His production company had produced some really, really good documentaries, and he was a pretty active and successful angel investor. To me, that just sounds like having the best time ever. But all that changed in November 2008 when, out of nowhere, the SEC filed civil insider trading charges. This centered around a phone call that Cuban got back in 2004 from the CEO of a publicly traded but very obscure search engine called mama.com. Never heard of it before. Cuban held about 6% of the company. Now, during this phone call, the CEO told Cuban about an impending PIPE. PIPE stands for Private Investment in Public Equity. So in other words, a company selling shares privately at a discount. So cheap stock for new investors, dilution for everyone else. So off the back of that call, Cuban sold his shares and avoided losses of $750,000. The SEC claimed that he'd agreed to keep the call confidential and by implication agreed not to trade. Now, Cuban's team argued that he never made that second promise not to trade, and the SEC really had no strong evidence to prove that he had. And so in 2009, the court agreed with Cuban, but the SEC appealed, and the whole thing dragged on until 2013, when a Dallas jury also cleared him. Now, Cuban had spent more on legal fees than the $2 million he could have paid to settle the whole case. But you see, that was the point. Cuban wanted a ruling. He wanted the SEC to defend its case because when the verdict came, the agency looked like bullies. And here's where I think there's a bigger issue. Regulators have normalized settlements in American business. Like, regulators bring a case, companies write a check, no one admits anything, everyone moves on. Like, I've given out about this in a good few episodes, I know. It's a bugbear of mine. How big businesses and individuals can buy their way out of trouble. It's scandalous. But the flip side, you see, is just as troubling. Regulators start to assume that they'll get a settlement every time, and they develop this quite, I suppose, infallibility, the belief that filing the case is enough, that the person on the other side will blink. But Cuban called their bluff, and he was right to, because, like, when a regulator brings a weak case and expects, fear to do the rest, that's not accountability. That's just bullying. And in this instance, Cuban fought it, won it, and exposed it. So kudos to him for that, I think. Now, while all of this was going on, of course, Cuban had joined Shark Tank. Initially, he was a guest on season 2, 2011, and by season 3, he was a permanent presence. Over here in Ireland, we have the UK version called Dragon's Den. I loved it. I watched it for years until, Peppa Pig and Sophia the First started taking over TV time. So I did watch some of the Shark Tank episodes as part of my research for this episode. And I gotta say that I like the Mark Cuban that I see in the programme. Yeah, he can be a bit arrogant at times, a bit overbearing, but overall he comes across as pretty fair. But you also got to realise it's a TV show, so everyone is playing to the camera in some way. Now, I want to dig into his overall performance on Shark Tank. So, over the course of his time on the programme, it's estimated that in total he invested $33 million. Now, I came across a podcast where Cuban was being interviewed, and he said he'd been beat on Shark Tank, that he hadn't made his cash investment back. But he's also quoted as saying that he made about $35 million back in cash. So I would say overall, maybe he's broken about even or maybe lost a bit cash-wise. But in terms of equity, he said that his various investments from the show are now worth about $250 million. And this figure does stand up when you look at even just two of his very big wins. So there was Beatbox Beverages. He put in $1 million for a third of that company. And at the time of recording this episode, it was reported in the Wall Street Journal that Anheuser-Busch were looking to buy that company for $700 million. His other big win was Dude Wipes. He invested $250,000 for a 25% stake, and that company is now worth about $300 million. Now, look, I'm sure his equity would have been diluted somewhat over the years, but based on those two deals alone, he probably has over 10x'd his investments. So, a good result. Like, if you're to analyse his overall performance on Shark Tank, a few standout winners, plenty of duds, and a few that did okay, which is precisely really how early stage venture works for everyone. Now, Now, another episode that he got entangled in, if you cast your mind back to 2008, it was the height of the Me Too movement. Sports Illustrated published an investigation into the Dallas Mavericks workplace. It described a corporate culture that was rife with misogyny and predatory sexual behaviour. The allegations triggered scrutiny from the NBA, and so they set up an independent investigation which found numerous instances of sexual harassment and inappropriate behaviour by executives and staffs at the Mavericks over many years. Now, it didn't find any evidence that Cuban knew of the worst conduct, but it faulted his oversight, and it did recommend broad reforms. Cuban himself later said he was embarrassed that the behaviour had occurred under his ownership. And, for a man who built his brand on mastery of detail, being a good judge of character, this was definitely a black mark. In 2023, he sold a majority stake in the Mavericks to the Adelson family. They're big casino owners. I'll definitely be doing an episode on them at some stage. The deal valued the franchise at $3.5 billion. Remember, he had bought it for $285 million. So a good ROI for Cuban. And he still held on to 27%. Now, there's a whole drama that has engulfed the Mavericks since the sale, with a lot of internal fighting. But at the time of recording, Cuban, he's still involved with the team. His main business focus since 2022 has been Cost Plus. It's basically an online pharmacy that aims to lower the cost of prescription medications by being transparent about pricing and eliminating middlemen. Now, Cost Plus, it's doing about $100 million revenue in 2024, which, it's solid. But in pharma, that's tiny. And also you have Amazon Pharmacy, which is doing around $1.8 billion in revenue. GoodRx, which is doing $750 million in revenue. But with all the publicity that Cuban's been doing around Cost Plus, as well as his general high profile, the media keep speculating that he'll run for president in 2028. Now, he's denied it, but with one caveat: he'll consider it if Trump tries to run for a third term. So, where am I on Mark Cuban? Now, some people see him as arrogant, and yeah, he can come across that way. And in fairness, he's admitted that himself publicly. There's the argument that he got lucky. He did. Broadcast.com sold at exactly the right time. But why would you criticize anyone for being lucky? I've never understood that. Yes, he's taken big swings that didn't work, like 2029 Entertainment. Depending on where you get your research from, Cuban's net worth is $4.7 billion according to Forbes, or $7.8 billion according to Bloomberg. And the argument could be made that if he had done absolutely nothing after Broadcast.com and just dumped his entire windfall into a boring, diversified portfolio and let it sit, he'd be worth somewhere between $7.5 and $8 billion today. But where's the fun in that? And that's what I like about Mark Cuban. Look, he's not top tier in terms of pure business genius. He's a good businessman. He's worked his ass off. And yes, he got lucky with Broadcast.com. What I like is that he seems to actually enjoy his wealth. Remember, after his first success, he took 5 years off, travelling. Then after Broadcast.com, he bought a basketball team because he loves the sport and is a huge Mavericks fan. Then Shark Tank, which in fairness, I've always thought if I ever made loads of money, I could live happily ever after being an angel investor. I mean, he's made mistakes, plenty of them, but I think for a billionaire, he comes across as a pretty okay guy. I like him, and he definitely makes for a great business story. Which brings me to listeners' emails, and this one is from Robert, who really, according to his email, wants me to do a story on Alan Bond. This is the larger-than-life Australian tycoon who rose from nothing to win the America's Cup, built a sprawling business empire. It collapsed in a storm of debt, fraud charges, and prison time. It is a fantastic story, and I'm definitely going to cover it. Thanks, Robert. And remember, if you have any comments, any corrections, or any story that you'd like us to cover, email me at info@gbspod.com. All the best, folks.